We will be beginning shortly in 4 minutes. 4 minutes. If everybody can hear my voice okay, please give me a one in the chat box. One in the chat box if you can hear my voice okay. Beginning in 2 minutes, folks, 2 minutes. Beginning in about 30 seconds, folks, 30 seconds. All right, we are starting. We are starting. Forgive me for the noise here. Let me share my screen. Hello, Janelle. All right. If you can see my screen and you can hear my voice okay, give me a one in the chat box, one in the chat box. Got the AC going on in the background. All right. This is our disclaimer. Atlas and its representatives are not licensed in the areas of financial planning, financial advice, or commodity trading advice. So what this means is that we cannot tell you what to do with your money. We can show you what the market may potentially do, but any decision that you make with your money, it is up to you. If you choose to act on this information that we present, that is up to you. Please read this disclaimer if you have not read it before. If you're okay with this disclaimer, please give me a 071420 in the chat box. 071420 in the chat box. All right, close this. All right, we're gonna get right in it, but first we're gonna go to the Blackboard. This is the beginner's class and intro to market structure. All right. So FAST is Forex Accelerated Strategy Trading, and I'm going to type that in the chat box. Give me a sec here. Got a lot of windows. A lot of windows happening here. All right, that's what FAST means. It is abbreviated short like this. The reason that it is accelerated is because you only have to worry about 3 candle types. And those 3 candles are flat bottom bullish, which for our purposes on my chart will be green. Flat top bearish, red. Doji-like candles that can be either red, green. 3 candles as opposed to the traditional type of candles, which I will show you in a second. Can you guys see this Blackboard here? Can everybody see this Blackboard? Give me a 1 in the chat box if you can see what I just typed on the Blackboard. All right. We'll come back here. Let me mute FAST. Let's make this bigger. All right. So this is what your traditional candles look like. This is the traditional candles. Each one of these candles, either they're indecision or decision. These are traditional Japanese candlesticks. If you have not gone through the Atlas Academy, we suggest that you go through the Atlas Academy so that you can have a proper foundation. It is suggested before you go through the live classes. It is suggested before you go through the live classes. So again, this is traditional Japanese candlesticks. On TradingView, you will need to have a TradingView account. That should have been gone over in the onboarding. So what are we going to need? We're going to need free TradingView account. We're going to need free demo account. Again, this information is in the Atlas onboarding section, or you can get with your sponsor / mentor for any assistance. If you don't find anything through either of those channels, then please reach out to me. Please reach out to me. All right. This is Heikin-Ashi candles. Can anybody tell me the difference between this picture, kind of like when you're in eyeglass place? What's better? This picture or this picture? What's more clear? 1 or 2? 1 or 2? 1, 2. Which is clearer? Anyone want to guess why 2 is clearer? Heikin-Ashi. Yes, Heikin-Ashi candles focus on the trend only. All you're seeing here is the trend. that the market is going in. You're not seeing the noise along the trend. You're not seeing all this other stuff happening in between. Heikin Ashi allows you to focus only on the direction of your trend. The trend is your friend. Remember that. The trend is your friend, and we are trend traders. We are trend traders. So let's go back to our Blackboard. Let's write that down. The trend is our friend, and let's make that all capital. We are trend traders. And I want to say this here too. We're going to go through the proper analysis before we even enter the market on what we think that the market is going to do based on all available evidence before us. So we don't hope in our trades. We're not hope traders. And we don't wish in our trades. We're not wish traders. We don't want to gamble with money. If you do like gambling and you want to gamble, go to a casino, go to Las Vegas. Don't do that in this market. Don't do that in the stock market. Don't do that with any money. Go to your casino, Las Vegas, where you want to bet, all that other stuff. Don't do that here. Here, you have to build with discipline and patience because we are paid to wait. That's how you get paid. You wait. And we're going to go back to the chart and we're going to look at some things, but we are paid to wait. All right. Heikin Ashi candles are what this system uses. Throughout the training, you're going to see that I will fluctuate between the Heikin Ashi candles and the line chart. I use the line chart because I want to find some important things that the line chart will show me. So, all right. So whenever we're entering the market, especially as beginners, we have to know three things. We have to know direction. We have to be able to spot that. Spot, identify. Sorry, I got alerts going off. 2, we have to know high, low prices. 3, we have to determine our entry and our exits based on the information we got from 1 and 2. These are the first things that we have to do. We want to know where the trend is. We want to know where our high and low prices are, and then we have to determine an entry and exit. And we do that by entering on a time/wave frame, okay? And the reason I say wave is because time is considered a wave. In all practical purposes, the market moves just like this. It'll start, it'll go up, it'll come down, it'll go back up, it'll go down. It doesn't move that pretty. This is called a sine wave. If you're familiar with alternating current, that's exactly the way that price moves. The signal of money moves like a sine wave. It doesn't move this pretty. Probably 1 out of 10 times it moves like this. Other times it's really messy. But this is the basic pattern of how money moves. It is a wave over time. Time is going to be on the bottom of your chart. Time waves. And I'll get into the waves in a second. Price is going to be here. Oh, I thought I was going to write perfectly. Price. Price here. So your x-axis is here. Your y-axis, let's see if I can do this, is here. Price on your chart. So you're going to look at how price moves over time. How price moves over time. Any questions so far? Any questions so far? Again, this is for the beginners. I apologize if some people have already been through this, but this is the restart of our beginners. Any questions? If you have any questions, please ask them in the chat box. Okay, all right. You can take a screenshot of this because I am going to erase this as we go further. So take a screenshot. I'm going to go to the chart here really quick. All right. So when you're looking at a chart, I start at the monthly. And the reason I start at the monthly is because, as I said, I want to establish direction. And let me mute volume. I want to establish direction. If you can tell me what direction that the market is moving here, the overall. So you have three things. Let's go to this. Let me write this first. Let's go back to our Blackboard before you answer that question. So three things. You have overall direction. You have short-term direction. And you have current direction. All right. Just by looking at our chart here, what is our overall direction? What is the overall direction? Type it in the chat box. Overall direction. Oh, yes, the overall direction is bearish. It is bearish. Yes. Got to start talking like the trader or / investor. Overall direction is bearish. Bearish. All right. Do we see a short-term direction here? Do we see a short-term direction here? What is our short-term direction? Bullish. And is that at the beginning or is that at the end? Short-term direction is at the end of the chart or at the beginning of the chart? The end. Okay, so let's get into this. Short-term direction. Short-term direction. Bullish. Yes, we had one at the book. We had it at the beginning. So let's take a look at this. So whenever you're looking at the chart, you're going to look and you're going to see all of past information. Each one of these candles is 1 month. The larger time frames dictate the smaller time frames. Got to spell it right first. Okay, meaning, so just as you're looking at a clock, or you're looking at the day, we each have 1 day. We know that there are 24 hours in 1 day. If you take the hours and you group them up, whether in 8 hours, 6 hours, 4 hours, they still all fall within under the day. They're not greater than the day. Does everybody understand that? The monthly is the same way. You have 30 days in a month. The individual weeks are not greater than the month. The individual days are not greater than the weeks. The individual hours are not greater than the day, and the individual minutes are not greater than the hours. Larger time frames dictate smaller time frames. So when you're drawing a trend line, and I like the color code, you will see that here. I like the color code. I like to keep things simple. So I'll use my trend line, which is located over here. I will give you guys, if it's not already pinned to the top of the community chat, I will give you a trading view tutorial. So I start at the top of the wick and I drag down to the next wick. If there's a wick, if there is no wick, we go to the edge of the candle for your trend line. We go to the edge of the candle for your trend line. This gap here, this gap space, you can draw another trend line starting from the edge down to the next edge. Okay, these are very close. If you wanted to turn on your magnet tool, which is over here, magnet tool, it'll snap it to the edge that you're trying to get to. Okay? The more trend lines that you have, the stronger the trend. The more trend lines that you have, the stronger the trend. Okay? So we know that this is a pretty steep bearish trend, but our short-term direction is in fact bullish. It is in fact bullish. Someone said that there was a bullish movement in the beginning. They are absolutely correct. They are absolutely correct. If you go through the Atlas Academy training, which I highly suggest that you do, they talk about this, the touches on the trend line. This break of the trend is called a counter trend line break. You would have sold here on this break. That would have been your confirmation to sell here. Again, I haven't even applied fast here. We're just going over some things that as beginners we need to know. Okay, your trend line, wick to wick. Okay, could you have even gotten even more granular with this upward trend line? Yes, you could have. You can do that. This is an art form, not a science. Trading is an art form, not a science. Okay? Not a science. Okay, so what I'm going to do, we've established these two trends. Almost like one, yes. We will, that's for a different class if you have familiarity with pitchforks. They're all based on fibs. What I'm going to do is I'm going to take these trend lines off. Okay. Can you see where the market splits just by looking at the monthly? This is where we're talking about zones. And let's go back to our blackboard here. Zones. Trade in zones. And this is a little more different than what people may you'll hear later on. And the zones that I'm talking about, buy zone, sell zone. Those are the zones that I'm talking about. We go back to the chart here. Can you see where price has split between a buy zone and a sell zone? Anyone? All right. The reason I like the line chart, I go to the line chart. I'm still on the monthly. I'm not even ready to trade this yet. I see here that this current monthly candle, we're 14 days in. This is your current direction. This is what I was talking about. This is the third one. Current direction. The current direction of this is bullish on the monthly candle. It's bullish because price has not closed below where it opened at. So price came down here. This candle here, it came down here. Oh, this is Heikin Ashi, so you're not gonna see that. So we'll get into that later. So Heikin Ashi is different, but this is a bullish candle right now. It's a bullish doji-like candle. We'll go over that in a second. This is a bullish doji-like candle. Okay, this is the current trend is bullish. So we would take, this would be we're getting into our high and our low prices. So, and I'm kind of jumping the gun here because we're looking at the current level. So current high and low, this is the high, this is the low for the current month of July. Here and here, low. Now let's go back. Let's go back. Let's go back to high and low still before I jump into the splitting of the zones. So, because we remember from here, we remember on our blackboard, high, low prices. We got to determine high, low prices. And all of the higher, low prices are going to be, or could be based on what you're seeing here, your overall direction, your short-term direction, and your current direction. Any questions before I go on any further? Going to give a 5 count. 1, 2, 3, 4, 5. Okay. All right. So can everybody agree that this area up here is the highest point of price? Everybody agree with that? This is the highest point of price. Again, I like to color code. That's going to be green. Can everybody agree that this is the lowest point of price down here? This is the lowest point of price. All right. I'm going to make this red. Okay, so when we came into this chart, and I'm going to put this down here. I'm going to put this trend line back. And I'm going to put this one back here. And I'm going to make this red. Okay, we came in and we have established overall direction, short-term direction, and current direction. We've established that. We've established overall high price, overall low price. We've established that. So now what we have to distinguish is our zones. We need to establish our zones. And as I said earlier on the blackboard, we need to establish buy zone and sell zone. Buy zone and sell zone. Would it not make more sense to buy in the buy zone and sell in the sell zone? Would that not make more sense to do that? All right. Again, because the trend is our friend and we are trend traders. So we need to identify this as well for us to enter the market. Yes, yes, yes. Over here above this line, we know that this is the buy zone because we are in a downward trend. We know that everything on this side is the sell zone. Okay, because this is the downward trend. That's the simplicity of that. But we got to get even more clear in what we're doing. So I like to go to the line chart. And the reason I go to the line chart is because I want to find, okay, please, I'm going to erase this here because I'm running out of room. I'm running out of room if you guys want to keep this. 5, 4, 3, 2, 1. We need to find PRZ, and that is primary reversal zones or price. That's not going to give me enough room. Price reversal zones. Okay, you'll hear that. PIP. PIP is how you make money in the market. And again, if you go through the beginner's training, you'll understand that PIP equals price interest point or point in interest. Or percentage, I'm sorry, percentage in interest. Sorry. Percentage in interest. Yeah, that's it. Percentage in interest point. That's what it is. percentage and interest point. That's what it is. I got a brain fart there, folks. That's PIP. Okay, these PRZ areas are key. These are key. That's why I capitalize it. It's key. How do we determine key PRZ areas? Okay, let's go back here first. The definition of a PRZ area, basic definition is this. Basic definition is multiple price touches on the top and bottom. Okay, now let's go to the chart. So the line chart is going to help us determine that. And again here, what do we have here? So the line chart is only going to show you the candle body. You see how far this is away from where we started at on the wick? The line chart only shows you the candle body. So we have identified a PRZ zone here. And I like to use purple for these. We've identified a PRZ zone here. We can see the price probably wicked up to this area, wicked up. We know it wicked up here because this is where our trend line touched. This is a PRZ area. Here, now can you see that this area is the buy zone? This area is the sell zone. So we've broken up this chart into two areas. Would that be point of control? No, not necessarily. It could be, but not necessarily. Point of control is volume. So when you're looking at your 70% area, so volume is broken up, and I'm not talking about volume over time, session volume and visible range volume, and that's for a whole different thing. I would not recommend that beginners start with that yet. If there is some reading material that you guys could do, if you'd like that. But point of control is at the 70% area where price activity is the most. Oh, no problem. No problem. Yeah, a lot of people use that because this is only, so we have the X and the Y. So let's go back here for a second. We have the X and the Y. So X is our time, Y is our price. What you don't see on your chart is volume. TradingView gives you volume over time. They give you that for free. Volume over time, they give you that. That's what you'll see on your chart when you pull it up. That's volume over time, but this here does not have a point of control. Volume over time does not have a POC. This line here for, oh, this is our, that was our low. That was our low. All right. So back to the line chart. So we have identified that this area here is our buy zone, even though the trend line is to the outside buy zone, but we know here that this is our buy zone, this is our sell zone. We can see where price was at its extreme, and now it is at its normal area. Why do I say normal area? And you have to understand when you're in any market, you're looking at statistics, and probabilities. God, I got to sound it out before I spell it. We trade statistics and probabilities in the market. Okay, that is probably the only science, is if you get deep enough into the tools and the history of the greats of old and how they traded. That's what you'll find as a science, the statistics side. Okay, so let's go back. All right, so here we know that anything below this area is our sell zone. Anything above this area is our buy zone. Again, this is the monthly. This is the monthly. This is a large area to trade. This is a large area to trade. This is not something that we would get into as a beginner. Okay. When I did start though, when I started, I was trading at the beginning of the month and I would let my trade go to the end of the month. And if I would check it weekly, first of the month I would be on there, the end of the month I would be there, and I would just check and see where I was at weekly. If I hit my stop loss, I'd have big stop losses, so you have to use proper risk management. Let's go into that really quick. Again, this is the overview for what FAST is. We'll get into actually looking at what FAST is in a second here. But there's just some stuff that you need to know. You can take a screenshot of this if you like. Screenshot of this if you like. And we're going to go back to the Blackboard. So you need to, their trade management, right? In trade management, you have three things. You have one, you have equity management. You have risk management. And you have profit regulation. Okay? Equity management is the rules that you have assigned to your money. The rules that you have assigned to your money. So you're going to say, I want to make 3% per day. Just say that. Rule number one for that is protect your money. Rule number two, grow your money. Rule number three, refer back to rule number one. Okay? Risk management. When I was starting to trade, they said that you must determine how much money you want to lose before you can determine how much money you want to make. So they say you're either going to risk 1 to 1, 1 to 2, 1 to 3, etc. So that means for every dollar that you risk, you're looking to make $1. You're looking to make $3. So that's your 1 to 3. Determine amount of money to risk. Your profit regulation is your break-even point. Your break-even point or your stop profit. Break even, all that means is that you have taken a minimum amount of profit that covers your commission, your spreads, so that you're not negative in your trade. A stop profit is when you move your stop loss up to like your break even point to cover that. So, and I'm going to go into the three types of orders here really quick. Again, you'll get that in the onboarding class. Let's go here. Three types of orders. And you're going to see these. You're going to see these orders because you're going to take the trade ideas. Three types of orders. You have market entry. I didn't do my one. You have limit orders. You have stop orders. In one order, all three of these things exist. And I'm going to give you an example here before we go back to chart. In one order, all three of these orders exist. Okay, let's get my line chart here. I use yellow for entry for mine. You can pick any color that you want. I use green for my profit. And I use red for my stop loss. Okay, you're going to get trade ideas, and they're going to have, the trade ideas are going to have entries, take profit, stop loss. Okay, entry, stop loss, take profit. Okay, this entry here for our trade ideas is a stop. For our trade ideas is a stop, but you can also use a market execution, and that is instantaneous. A stop I'm going to show you what a stop is. The stop loss is a limit order. The take profit is a stop order. Okay, let's take a look. For our trade, let's use green. All right, for our trades, we're waiting for price to come through and activate our stop order. So you get these from the Atlas VIP trade ideas, okay? And we set a stop loss. Price comes back down. If price hits our stop, it takes out our limit order. A limit order means that price comes back to the point that you set in price over time. That's what that means. Price comes back to the area that you set in price over time. That's what that means. Okay, if price does not take us out, meaning it does not hit our stop limit order, it goes up and continues. It's not real pretty, but it goes up. It goes up. And come on. And it goes through and hits our take profit. That is a stop order. So a stop order is this. Price has to come up and activate it for the order to be entered into the market. A limit order, price must fall back down to it and then go in the direction that we are wanting to go in, the direction of the trend. Any questions on what I just said here? Your 3 types of orders. This is all, you have to set all of these up in your MT4 mobile or your MT4 desktop. So you have to know at all times where you are going to do that if you are trading on your own outside of the Atlas trade ideas. But these are the simplicity of the orders and how they are triggered. Okay. All right. So here we are back. We are back. We are 5:38 now, 20 minutes. All right. So we've established that we know what our buy zone is. We know what our sell zone is. We know that this here is the short-term trend, not the current trend. So how do we know when to buy for our entry exits? This is what the beginning settings of FAST are for. So I'm going to apply the tool. This is the monthly. That's why you see the institutional 200 only as this short area. Okay. The beginning settings of FAST are only the 200 moving average and the 50 moving average and your SARs. And I'm going to go over what all that means here. These are the settings. When you load FAST, you're going to get, it's going to pop up on your screen. And you're going to get it. You're going to give us your TradingView username. Once we get your TradingView username, it will show up in invite only scripts. Then you will click on FAST version 4 and FAST RSI. Okay, that's 2 different things. Okay, but I'm going to show you those. Right now we're going over the FAST. The RSI is a companion tool to the FAST strategy. All right, simplicity's sake, red light, green light, red light, green light. Again, we only have 3 types of candles. When we see a green candle, we're buying. If we want to have a matching SAR, this is the and. So we see a green candle and a matching SAR telling us that we're going to buy. If we're going to sell, we're going to sell with a red candle and red SAR above. But there are conditions. We do not just jump into the market. We do not just jump into the market. We have to buy with rules. So for simplicity's sake, let's go back to the blackboard. Rules of FAST. I am going to erase this. You may take a screenshot if you like. 5, 4, 3, 2, 1. All right. Rules of FAST. if we're going to buy, must have flat bottom green candle and green, won't let me, and green SAR. To sell, must have flat top red candle and red SAR. Okay? Simple. Simple rules. Simple rules. Okay? As I said though, for beginners, buy, price must be above 50 EMA. All right, so you have these simple rules here. How many people think that they can take this information and look for opportunities in the market with fast? You got 3 candles, a green candle, a red candle, a doji light candle. If you think that you can use this to trade in the market, give me a Y. All right, so we're going to go back to the chart. We're going to go back to the chart. All right, so we, and again, I'm here on the monthly. We're going to go through, we're going to get really granular as the class progresses. All right, so we know we have established our overall direction. We have established our short-term direction. Would we look to buy right now in the market? If we were looking on the monthly, would we look to buy in the market? Yes or no? Rebecca says no. Anybody agree with her or disagree with her? Janelle says no. You're right. We would not look to buy. What would be the best thing for us to do in this type of market where we were at? What zone are we in? What type of market order will we be looking to do? Sell. Yes, sell. Because we are in the sell zone, and is price above the 50 EMA or below the 50 EMA? It is below, yes. And as we get closer to price action, as we get closer, say at this monthly candle here, is this a time to sell right now? Would we sell right now? Yes or no? Just based on these, let's go back to our blackboard, based on these rules to sell, flat top red candle and red SAR, and price must be below the 50 EMA. Janelle, you said yes on me. We don't have, yes, we want to have red SARs like we have here, and we want to have the flat top candles, okay? In fast, we are going to get our buy and sell signals when certain conditions are met. We're also going to get potential exits. The reason that I turn this off is because it can get messy. This is the monthly, so it's not so bad. When you get down to the smaller time frames, they start to stack up. And you see that these potential exits are on doji-like candles. For beginners, though, you are very restricted on when you enter the market. Even though that you see an entry here to buy, you wouldn't do this because this is a counter trend move. And we talked about that earlier. This is a counter trend move. The overall trend is down. And we don't want to trade against the trend because why? Why do we not want to trade against the trend? Because the trend is our friend. Yes. All right. So we would have to wait. And this is why I'm saying we are paid to wait. In order to see, again, this is the monthly. So each one of these candles are monthly. we would have to, and this is getting more into the advanced side of the class, more than beginners, we would have to take a look at what our current trend is, our high and our low prices. We would mark these off. We would mark off this area. And again, I use the color codes, but you guys know this. We would mark off these areas and we would put a vertical bar on our monthly candle, and then we drop down to the weekly. And we're seeing what's happened in the weekly. This is why we are bullish right now. Price is wicking off of our moving average. The reason that I use these institutional moving averages, so on institutional moving averages, you'll see this. If you ever look at any of the financial shows, the money shows, institutional moving averages, they use, and it all depends on what they're talking about. They use the 10-day, 20-day, 50-day, 100-day, 200-day. You'll see that on your financial news shows. They'll use one or two of these. You won't see all of them on their chart, but you'll see one or two of these, depending on what they're doing. Usually you'll see the 50-day and the 200-day, or the 100-day and the 200-day, or you'll see the 10 and the 20-day together on your news show, your financial news shows. That's one thing as a beginner, I would suggest that you pay attention to. You pay attention to financial news because you're learning how to trade well. And most people have to have a shift in their mind. They need to start catching the things that they're saying about our money. Okay, so you need to tune in instead of tuning in to, like one of your favorite shows, murder, what is that one, the lady, How to Get Away with Murder. Watch Bloomberg or something like that. I prefer Bloomberg, first choice. Then I like Fox Business, and then I like CNN Money. I like Charles Payne on Fox Business. I also subscribe to his newsletter, Charles Payne, but I use Bloomberg first. So you want to start looking at financial news because especially now in these times, you'll have things that they'll talk about and you'll hear this. Let's go back to the blackboard. They will say risk on or risk off environment. All that means is money staying with currency, or is money going away to alternative forms of currency like gold, silver, Bitcoin, crypto, things like that. So that's all risk on, risk off means. All right, so the weekly here, again, we are establishing between our high and our low prices. We would then drop down to the daily. Again, this is all for another class that we're going to do. On the daily here, it's bouncing off of the 200. So this is called a BTS move. This, because it's the daily, there's enough to trade here. But we don't have a red SAR. We have a flat candle for beginners, but we don't have a red SAR up top to tell us to go ahead and sell. So we would not sell. Again, we're waiting. These SARs, they tell us the direction of the trend. The closer that they are to price, your trend is weakening. The further are they away from price, you have a strong trend. Okay? When price hits them, you'll see that flip. When price hits them, you'll see that flip. And that goes to how do we exit out of the market? Our rules for exiting. As a beginner, you will exit. Exit on a color change or SAR flip. Your color change is going to happen usually with a doji-like candle. And you usually see that transition when you go from a swing movement change. So this is a upward swing movement. This is a downward swing movement. Okay, that's what I mean. Upward swing movement, downward swing movement. When you have a doji-like candle, you're going to see that at the peak or the valley of your swing movement. Before I go, we got 10 minutes here. I need to give you some important definitions that you need to have as beginners. You need to know whether you're using the Heikin Ashi system or you're using traditional candles. You must understand, and we're going to get into more market structure on day 2 class. I need to see when we can have a day 2 class because Friday I'm traveling to Texas. I don't know yet for Friday's class. I need to see if I'm going to do something earlier in the week. I just need to check and see the time. So, okay. So, definitions, important definitions. All right. You got to know what the definition of a high is. Okay, and that a high is 2 candlesticks to the left and right that are, it's not going to give me enough room, that are lower than center wick body high. And we'll look at some stuff on the chart in a second. A low, 2 candlesticks to the left and right that are higher. No, let's make that the same. That are higher than center wick body high. Okay? Come on. Come on, Windows. I think Windows has just got, oh, it just closed on me. It just closed on me. Let me see if I can pop it back open and get it. No, it erased all that. Wow, Windows. Or it could be that. I won't blame it on Windows. All right, let me write it here. So you're gonna have 2 candlesticks for a high. And we're gonna look at this here. Let me turn off fast, okay? For a high, you're gonna have 2 candlesticks to the left, 2 candlesticks to the right that are lower than center wick high. I will give you instructions on where to get the indicator just before class. Okay, so this is our high here. 2 candlesticks to the left, 2 candlesticks to the right that are lower than center wick high. This is our low. We have 2 candlesticks to the left, 2 candlesticks to the right that are that are higher than center wick low. Everybody understand that? Everybody understand that? The definition of a high and a low. No, they don't have to be the same color. They just have to meet the definition rules for a low and a high. This here, this candle here, this is a low also because these 2 candles to the right side are higher than the wick of this here. This is another low. This is a low. You have to distinguish your highs and your lows in the market so that you can spot potential changes in market direction. Understanding market direction is how you're going to become wealthy. Understanding market direction is how you're going to become wealthy. The 2 most important definitions that you can have is what's a high, how to determine what a high is, how to determine what a low is. Okay? Low, high. Any questions what we covered today? Again, this is our first day. This is the intro class. Any questions? Any questions? I will give you instructions on where to get the fast indicator in a sec. No questions? You guys are all good. Okay. Also, you can see here that we have another zone set up. Bloomberg. Bloomberg is the news channel I go to. Bloomberg. Yep, I'm going to put that in there. You can see when we identify the high and the low prices for the current month, we have our trading zone. And you can see that price is moving in that area. You can see price is moving in that area from the previous month and our current month. You can see that. This is our zone. This would be our current, again, our current high price, our current low price. This is where we would be at. Current high price, current high, current low. This is our zone where we would trade from, and we are 14 days in. This is the weekly. So this is what we have here. Each one of these candles, oh, this is the daily, sorry. Each one of these candles is a day, okay? Each one of these candles is one day. And right now, price is bouncing off of the monthly high. So Charles Payne, Fox Business. So he's on the Fox Business Network. He does the money section there, Charles Payne. And let me put that here. I'll type it in the chat box. All right. So we right now, so we have a zone. We actually have a zone as we get more granular into trading. Okay. And if we put fast back on air, we're putting fast back on air. Okay, we saw this. You see that price is between the 200 moving average and the 50 moving average. And we'll get into that. We'll get into more of this later this week here. Friday would be the next class, but I'm traveling Friday, so I'll have to try to do a makeup class. Yeah, I'll type that. I'll type those here since we lost it. So definition of a high. 2 candlesticks to the left and I made and high or cap. That's the high definition. That's the definition of a low. Let me give you something here. You're going to need this. Where are we at? All right, this is a TradingView tutorial. TradingView tutorial. In order to get the fast indicator and the RSI indicator, you must go into the Atlas Discord, Atlas community chat, click on the pinned messages, and you are going to scroll down. All right. Here is the information here back on 6/17/2020. It tells you what to do to get the fast indicator. Okay. It tells you what to do. It also, there's some other information that I pinned. Please look at this information. Please look at this information. Please download this guide to your desktop. I put this together for you. Okay. Pinned information in the Atlas community chat. Please follow the instructions to get the indicator. If you have a new TradingView account, it's going to take a couple of hours before your TradingView username propagates through the system so that we can see it. When you get the indicator approved for your TradingView name, you will see a thumbs up in the area that you put your TradingView name. We will give you a thumbs up when we see that you're, when we give you the information, we'll give you a thumbs up under your TradingView name, and it's all done here under this Discord link here. Any questions? Any questions? All right, this recording will be available. It will be available in past recordings, and it will be in the. Where's Aaron at? Fast Spence. The Smart Cloud. Okay, right here. The session library. Got it. All right. Session library right here. Thank you, Aaron. Thank you. This is where you're going to see the recording at, and I'm going to get this cleaned up because this needs to all be in the library here, not individual sessions. So I'm going to get that cleaned up for you guys. Thank you all. Thank you. So we will progress on from where we left off tonight and next week's session. I'm sorry, this week's session. I am going to do a makeup class. I just need to look at the calendar and see what slots are available. I am traveling Friday to do our event in Houston. All right. Thank you, guys. Thank you.